Okay, same deal. The other way to enter the market, the second way to enter the market, is via a trend change. In other words, the market has been in a downtrend. It forms a peak, where I'm showing you here, carries on downward, comes back up, okay? And the peak is taken out. Just because the peak is taken out, can you enter the market? The answer is no. There is a fixed rule for that. And this is buying rule number 2. I just want to see where my words are. Okay, buying rule number 2. Okay. Buy, and we will come back and show you the chart. Buy on bar A when the price surpasses the previous peak, providing, and this is page 32 by the way, the high-low activator sell stop is below the bars. Let me show you what this means. What I'm going to do is put this in green. Okay. What does the wording say? The wording says, excuse me, I'll do the little thick side, but at least you can see what I'm talking about. Buy on bar A when the price surpasses the previous peak, providing the high-low activator sell stop is below the bars. Why? Because we cannot enter the market unless we know where our sell stop is. In other words, this safeguards you from entering the market. It doesn't mean I can phone your broker on your behalf. And what's even worse, the program won't phone the broker and tell you where your sell stop is. You have to do that yourself. I'm not being facetious. People have asked me, why doesn't this program dial the broker? What in fact happens is that the moment the bar before bar A closes above your buy stop, as is shown here. Can you see that? The sell stop comes up to this point. You can already anticipate as the prices are rising that there is a potential that the peak will be taken out. And your buy entry via rule number 2 is already qualified by the fact that the sell stop has come up even though the trend has not yet changed. In other words, the buy and sell stops operate independently of the peaks and the valleys and of the trend changes. Obviously, it's a different calculation. But this has to be there before you can even think of entering the market via this long entry rule number 2. Now, tells you if using real-time data, the change occurs instantly, okay? So what in fact happens is that as the prices take out on bar number A the previous peak, the actual trend itself changes at that time. Often this occurs on the close, but if you are looking at the market, you don't have to wait for the close. For this particular rule, you will see that the change occurs when the prices take out this peak. Question: if you're not watching the market during the trading day, how would you know? Very simple. The peak number 1 occurred 1, 2, 3, 4, 5 days before. Okay? So you know where that peak is for 5 days. Secondly, the previous day, okay, the previous day before bar A, you already had a close above the high-low activator buy stop at this point here. So you knew there was a potential that if the prices carried on for one more day higher, there was a chance that the pink may be taken out. So this, and the opposite is true when we're going to sell the short entry sell rules. Rule number 2, the value has to be taken out, and once again you can only act if the buy stop above you had come up already by virtue of the fact that this close was 2 ticks minimum below the high-low activator sell stop. Okay, so that's the second way you can enter the market. You have all these rules with you. Yes? There's no monkey wrench. If you throw a monkey wrench at me, I'll throw the monkey back at you. Okay, carry on.
In the long entry buy, rule 2, the first graph we looked at, if the line, if the trend were not changing,
You can't buy it. You can't buy it. It has to be, this plan only acts, this is the concept you have to get in your head. I can only buy if the trend is up. This is the basic plan. I can only buy if the trend is up. If the trend is down and it doesn't change, you can't buy. Not with this plan. We have other plans where you'd be a contra-trend buy, yes, but we don't want to confuse the issue. Let's get one thing, fixed in the box. I can only buy with the trend. I can only sell with the trend. The trend is down, I can only sell. I can't buy. I'm not allowed to. Otherwise, if you do, this plan will fall apart.
But you know the trend is going to change if you set your buy stop.
Of course. But you know where it's going to be, and the buy stop has already been closed over the day before, which is what occurred here. But you cannot guarantee that it's going to change until it actually takes out the peak. Once the peak is taken out, according to our definition, the trend has changed to uptrend, you're ready to buy. Boom. It's more simple than you think. No, you buy on bar A. Yeah, because because the bar before, dear, look at the bar before. The bar before bar A had already closed above the high-low activator buy stop. So our qualifier is there. The only thing that we need to actually buy with is the previous peak to be taken out. What? That's a buy. Finished. The qualifier has been met. We only need 2 things, trend up and above the buy stop. This is the same as actually as the first rule, but the other way around. No, it's taken out by price, but some people prefer to wait until the close. They feel a little more comfortable, safer, you know, like that. Okay. The other way to enter, again, the same thing applies. Once again, we can only buy with the trend. This is buy rule number 3, uptrend. If the trend is already up, this is a very, very useful rule. Why? Let us presume you've been on holiday or on vacation. There are only 2 examples. The trend is up, and you missed the buy point 2 weeks before. And I'll show you examples in IBM where we clicked in, and for 2 weeks we had nothing to do. Just sit and smile, keep our mouths shut, don't phone the broker, keep our hands in our pockets, and be happy. Believe me, one of the most difficult things in this business is to keep your mouth shut. Leave the guy alone. See, you know, we all got a habit. We want action. You know, you want action, go to Vegas. If this little tool supports you, and you will see, you watch it. I don't care what. I'll show you. I've got 27 different stocks. and I don't know how many, all the commodities in my trusty little portable. Once these guys are supporting you up, you just keep quiet. Just let it go. Let it do its own thing. Give the market a chance to breathe. I'm giving you a tool that works. Don't throw it out and spoil it. Of course, when do we make our real money? Is when these little trend runs of 1, 2, 3, 4 days, and sometimes it's not 3 or 4 days. Sometimes it really is 2 or 3 weeks. I will show you the high-low activator on soybeans. Last year, I don't know if I have the chart here, I think for 23 trading days this thing held. You had nothing to do. I got students who made on a 3-lot 17,000 bucks. Not stories, real money. Okay. Right, the third way to enter the market